As a new trading week begins, the major U.S. stock averages are flatlining. We saw a lower open, but of course there is uncertainty about tax reform legislation and about global politics. Joining me now is Peter Cardillo for Standard Financial. Peter, great to have you here today.
Good to be back.
Well, it is a full trading week this week. Next week we have Thanksgiving, so it won't be a full trading week. But in terms of the tax reform legislation, there are concerns about the corporate tax rate and when that will come into effect. So what does this mean for the broader market?
Well, I think it's going to keep the market basically in a bumpy mode, and I think that we're going to see more days like we saw on Friday and like we're seeing today. Basically, that's the key. Now, I do expect that there'll be some sort of a compromise. Question is, will they postpone the full tax deduction for corporate America, or will it come in sort of like a piecemeal? Perhaps maybe 5% beginning immediately and the balance a year from now. I think that's the big question. And if that were to happen, then I don't think it would be all that negative. But if they would just simply put off corporate tax reduction till 2018, I think that would be a big deal, and I think that would certainly, depress investors' confidence, and that would probably mean a market correction sooner than anticipated.
And Peter, if we look at the calendar for the week ahead, we get a handful of global economic data, including GDP, as well as inflation, and here in the U.S., advanced retail figures. But in terms of a Fed rate hike, that is already priced in for the market. So given all the political concerns and given that U.S. President Trump will be returning to the U.S., what are you watching?
Well, looking at retail sales, I think that's probably the real key for the macro calendar this week. I expect them to be up about 1%. Down from that 1.6, 1.7 range that we saw the previous month, but still a solid number, which indicates that, we could probably see growth in this quarter close to 3%. I think that, really nothing changes at the Fed. Basically, the replacement of Yellen doesn't take effect till next year, and so I think that she's not going to hold back. From a transitory inflation perspective, we're going to see higher inflation. And so that sort of plays even more into the hands of the Fed.
And last but not least, before I let you go, I do want to touch upon the UK. Now, earlier we saw the British pound fall against the US currency, breaking 131. And this does come amid uncertainty regarding UK Prime Minister Theresa May's future. What do you expect to see, especially with Brexit?
Well, she has her hands full and has a lot of political problems, and I suspect that, if she survives, then, nothing is going to happen. If she doesn't survive, it's going to be a rather chaotic situation in Great Britain, and that, could actually impact the EU. Great Britain right now is walking on a very slippery path, and it all depends whether or not May survives or doesn't survive.
Okay, Peter. Well, thank you so much for covering so much ground at the beginning of the week.
My pleasure.